welcome to PBA at Noon. I'm Paul Benwell, and I'm joined by my colleague, Sophie Caesar. We are very pleased and excited to be hosting Discovery Silver, which trades on the TSX Venture under the symbol DSV and currently trading at $2.49. Discovery's flagship project is its 100% owned Cordero project, one of the few silver projects globally that offers margin, size, and scalability. Cordero is located close to infrastructure in a prolific mining belt in Chihuahua State, Mexico. Discovery recently announced its Q1 financial results, and it boasts a robust $91 million in cash on hand. They announced a PEA on their Cordero project in early May. Here to give us an update is CEO Singh and Corporate Development, VP of Corporate Development, Forbes Gemmell. Gentlemen, whenever you're ready to start, go ahead, and we will certainly have some questions for you at the end. Thank you.
Perfect. Thank you, Paul. Forbes will get the presentation up. I'm Singh, President and CEO of the company, and we'll just get started right away, get right into it. We are Discovery Silver, and we are focused on our flagship project, as Paul mentioned, the Cordero Silver project located in Chihuahua State, Mexico, on a major gold-silver belt. There will be forward-looking statements in the course of this presentation. And then kind of to get to it right away, what is the real investment case here for Discovery? We truly believe Cordero is one of the most important silver assets in the world, period. We think it is very unique in the fact that it offers margin, size, and scalability, the three things. You'll have assets that often have in the silver space that offer margin, some that offer size. Rare to get both of those. But in addition to that, Cordero offers scalability because it's one of the few primary silver open pit mines, open pit projects in the world. So you not only get the margin expansion as silver price increases, but the actual size of the resource expands very considerably as silver price increases. We've been able to show fantastic margins from our drill results over the past year and a half since we've been drilling the project. Size is pretty clear cut. It's the world's largest undeveloped silver deposit, and then scalability is what we will talk to as well in this presentation. Couple quick slides on macro conditions for precious metals, but specifically for silver. We know the fundamentals for both gold and silver right now really couldn't be better. Interest rates essentially zero, unprecedented fiscal stimulus, and monetary injections by central banks like we've never seen before. The key part to note of that is that silver has consistently outperformed gold in every bull market in modern history. So if we move to the next slide, you see the last three precious metal bull markets, and you will see that silver lags gold. It definitely starts moving first and is pretty steady on its increase. But when silver starts moving, in every single instance here, and even in ones previous, as I said, all the way since in modern history, silver has materially outperformed gold. We've started kind of this precious metal bull run. It's had some blips here and there. We started saying late 2018. Who knows when it's going to end? But it really feels like we're in the early innings of a precious metals bull market. And to leave you with something, gold almost basically is close to or near its all-time high of $2,000 an ounce. Remember, silver hit $50 an ounce, its all-time high in 2011-12, and we're nowhere near that. So we definitely think the tailwinds look very strong for silver. Looking at silver supply and demand pretty quickly here, this kind of shows you what silver is used for. And silver, different than gold, has a dual nature to it. It's the investment side of it and then the industrial use side of it. So you can see the various splits across the years estimated by the Silver Institute, these charts, and by BMO Capital Markets. What you really want to draw your attention to is two key points. One is the use of silver in very much in applications that are growing is electric vehicles, significant amount of usage and growing steadily, 5G, 6G networks, and solar panels. Those are the big three things. So that's actually what's going to be causing the industrial demand of silver to increase. And you can see on the chart on the right, the supply is just simply not going to be able to keep up. These, as everyone knows, mines take years to build, years to outline a resource. It's simply by the estimates, if investment demand does not even increase, we're almost going to be at a 200 million ounce deficit by 2030. A global supply is about 1 billion ounces. So almost 20% of that is we're going to be in a deficit of, and that's not including an investment demand increase, which we clearly see is increasing. So from both sides, the industrial side and the investment side, we think there's some very, very strong push for silver to keep moving strong. Moving on to the basics of Discovery Silver. We are located in Chihuahua State, Mexico. That's where our flagship Cordero project is. We're located on a major gold-silver belt with a lot of long-lived, robust mines near us. Some of the neighbors are shown here. And as you know, Mexico is the world's largest silver producer. In 2018, a global resource was announced on the Cordero project of over 1 billion ounces of silver equivalent. Silver represents roughly 60 to 65% of that by revenue, and gold about 5% or so, and then the rest in zinc lead, making us one of the highest, one of the silver companies with the highest exposure to silver, which is also very important if you think things look good for silver. We are OTCQX listed as well as TSX Venture listed, and our cash position is over $90 million now, as Paul had pointed out, with no debt. So we really feel we're in a very strong position to aggressively advance this project to a construction decision. And we actually feel like we'll be in a position to have a significant amount of the equity capital needed for the build as well, once we get to the construction decision, because of the cash balance being quite large. Moving forward, just to give you some background on kind of the backing behind Discovery Silver, we are part of the Oxygen group of companies. Oxygen is an integrated merchant bank and mining house, and they're the founder and cornerstone shareholder of Discovery. There are 4 active companies now in Oxygen: Discovery Silver, Liberty Gold, which is focused on the Great Basin; Pure Gold, which just started production at its high-grade underground mine in Ontario; and then Northwest Copper, focused in British Columbia. But the main point of that, those are the active companies, but Oxygen has had serial success over the past decade. They've created 9 companies. 5 have been acquired, and it's crystallized over $3 billion of value. The big one to remember is obviously Frontier Gold, but also True Gold was a big recent sale as well to Endeavour Mining. The other point to note here is Eric Sprott, a very well-known investor. Obviously, you all know. He owns 25% of Discovery, and that is one of his largest investments in the silver space. That's the quote, but is actually his largest investment in a silver exploration and development company. The only one even in the entire silver space that's larger than us is First Majestic, which just happened recently. Moving forward, quick notes on the capital structure. You'll see, as I mentioned, Eric Sprott is at 25%. If you look at the pie chart, retail is about 1/3 and institutions are about 1/3. And then founders, management, and board are about 10%, which obviously shows we've got skin in the game, incentivized to make this a success. Market cap is in and around the $800 million mark, and the trading volumes, wanted to point out, we're trading, it's a little lighter over the past, as we get into the summer, maybe 1 million or so shares a day between the two, but over the past year, we've probably been averaging close to 2 million shares a day. So the liquidity is fantastic, and something we've been obviously making concerted effort at improving, and it's been working. We move forward now, just getting right to the asset level. Before we talk about the technical highlights of the asset, you obviously need certain qualitative characteristics of the asset for it eventually to become a mine. And we think Cordero has all of those ingredients. First of all, it's a simple structure. It's 100% owned by us, no JVs, no earn-ins, no option agreements. Secondly, large land package. We are not land constrained at all. And that's very important for an eventual open pit mine. You'll see the location on this 3D plan map of Cordero, and you'll see we have 35,000 hectares around it. The Cordero resource area, the pit area, occupies less than 1,000 hectares. So, great amount of kind of room for layout and logistics, again, for an eventual open pit mine. Infrastructure, in the turquoise line on the left side of this plan map, you'll see that's a major highway. And then on the other side of the property, you've got a power line. So in terms of operating costs, capital costs, all significant advantages this project has, and being close to infrastructure. The topography is a classic rolling northern Mexico type of topography, perfect for a big open pit mine. And again, we are located in the Chihuahua State, which is considered one of the most mining friendly states in all of Mexico. Looking at the catalysts and objectives for the year, we've started phase 1 drilling in late 2019 when we acquired the property, and that has moved all the way till April 30th is when we ended the phase 1 drilling, and seamlessly phase 2 drilling has begun. That kind of cutoff for phase 1 and phase 2 was simply that is all of the data that will feed the new resource estimate, which is the big catalyst coming, and then the even more important catalyst is the revamped PEA to show the economics of this new way of looking at this project, which we'll talk about in a second. The metallurgical testing has also started, and that'll wrap up around the end of Q2. And I do want to point out our phase 1 drilling program was about 75,000 meters. I may have missed that, which is one of the biggest programs in the silver space. Just again, showing the kind of size this property had, the size and potential this property has. It already had a lot of drilling. We've put even more drilling into it, further de-risking it. Separately, I didn't talk about on the previous slide, but because of our large land package, there are several very interesting new early stage targets on the property that could be related to the deposit. I mean, we're right in the perfect area geologically, so we hope that there'll be other discoveries on the property, on our property package. So we should be able to begin property-wide drilling late this year, early next year. We've already done airborne geophysics, as well as quite a bit of geochemistry all over the property, looking at various targets. And there's several very, very interesting targets that have not seen really any work or any drilling prior to us coming in. Moving forward, I will pass it off to Forbes. Forbes is the owner's rep on our technical study for Cordero, and he's the VP Corporate Development. Forbes?
Yeah, thanks, Taj. So we're just going to show you what the project looked like when we acquired it in August 2019, because there is this legacy perception that Cordero it's a beast of a deposit, but it's low grade and it's only going to make money at high silver prices. And so what we're showing here on the right is a plan map. So we're looking down from above, and this is the pit outline from the study that was done in 2018 by the predecessor company. And just for context, the scale here, you've got almost 3 kilometers of strike extent and almost 2.5 kilometers of lateral extent. So that's a very, very big footprint. And what we're showing inside that footprint is all the historic drilling. So before we did anything, you can see the drill hole traces. And what we're showing on those drill hole traces is any mineralized intercept in orange between 50 to 100 gram per ton, and magenta greater than 100 gram per ton silver equivalent. So for context, we would classify that type of grade as sort of high grade mineralization that should make good margin at, say, an $18 per ounce silver price. So our starting point when we acquired the project, we could see that you had this lovely sort of high grade zone in the north corridor, but outside of that, there was a lot of smoke, but just very big gaps in the drilling. And so now we're going to show you this exact same image, but with 45,000 meters of our drilling overlaid onto the top. So you can sort of see all those big gaps that are outside that orange zone. We've been able to come in and effectively plug those, and that sort of high grade domain, which was originally that size footprint, has now grown to the extent where it's almost 1.5 kilometers long and almost 1 kilometer wide. So we still have another 30,000 meters of assays to come in. And we're hoping that this zone will just sort of keep extending in this direction. But really, it's this good grade mineralization that's going to be the engine room for the PEA, which we're going to be putting out in the 4th quarter of this year, which for us is really a huge catalyst. We've had our heads down doing this drilling, surfacing a lot of value, but we won't be able to articulate what we've done until we've actually put out that study. And just for context of the study, this is what it's going to look like. So this was the old study. It had a bigger is better approach, very low cutoff grade, which meant the head grade going to the mill was low. It meant you had to have a big mill. CapEx, as a result, was almost 600 million. So our approach, we're going to be focusing on that high grade mineralization. So rather than 46 gram per ton, targeting feeding the mill with grades double, triple that. And by doing so, we don't have to have such a big mill up front. And so we can build something at 15,000 ton a day. Hopefully we can get that built for a CapEx around, say, 300 million. So a very palatable amount. And then when the mine's up and running, we can then expand that mill to 30,000 ton a day. And look, even at that lower throughput rate, 15,000 ton a day, this will still be a top 10 primary silver mine. When we do that expansion, now we're a top 5 primary silver mine, and some years potentially the biggest. Well, this will be the biggest silver mine globally. So huge amount of scalability, and important to keep in mind this study is going to be supported by a huge amount of data, almost 200,000 meters of drilling and more than 400 drill holes. So it's not a wishy-washy PEA. It should be a very technically robust study. We're just going to finally circle back on this concept of scalability, because it's a very important nuance. It's often missed. And what we're showing here is the old resource at different cutoff grades. So this is the highest cutoff grade. You can see there's almost 700 million ounces of silver equivalent. So this is the ounces that should make good margin at $18 per ounce silver price. The silver prices go up, which obviously they have already, and you can lower the cutoff grade. You can see you've got almost 500 million ounces of medium grade ore sitting on the sidelines. And then obviously if silver prices go higher again, and you're able to lower the cutoff grade more, you've got another 400 million ounces sitting on the sidelines that now could become economic. So if you look at a standard silver deposit, mostly they're veins, this column does not change when you play around with the cutoff grade. So you get margin expansion at higher silver prices, but you don't get the resource expansion. We get the margin expansion on this, but we have hundreds of millions of ounces sitting there on the sidelines that now are economic. So it's that scalability concept that is missed, and it is rare to find. I mean, what we're showing here is the top 15 largest undeveloped silver deposits. We've just ranked them by the amount of silver in each deposit. So if you're an investor trying to get exposure to big silver and that type of scalability, you can see of this top 15 list, there's only 3 deposits where silver is the primary commodity. And of those 3, we're at the top of the list. La Pizzeria, it's a small component of SSR mining. And then the third on the list is Corani, which is owned by Bear Creek. But yeah, for an investor trying to get exposure to that, we feel you can get direct exposure through us. But not only that, if you look ahead through the remainder of the year, we have some very significant catalysts in terms of the resource estimate in Q3 and the PEA in Q4. So we're very much looking forward to getting those out and hopefully riding the tailwinds of what looks to be a very exciting time in the silver market alongside that too. So I'll now hand that over. Is it Sophie? Are you going to manage the Q&A? We're happy to answer any questions if there are from here.
I am. Thank you so much, gentlemen. So let's start off with this one. What type of geology setting are you sitting on, and how do you explain the low silver grade, and how will the met work? I guess that's 3 questions in total.
Yeah, I can try to touch on that. So basically the rock types we find that are mineralized in the system, and here's the conceptual geological model. The 3 main rock types are the breccias, sediments, and volcanics. So it's a complex setting where you've had multiple mineralizing events. It's related to an intrusive, and you'll see these veins come up. They flank actually the open pit. They've kept the mineralization kind of intact based on the rock units it was within. When it reached an area where the rocks were more permeable, it disseminated the mineralization. So that ties in with the second question of the low silver grades. So I would call it disseminated silver grades. I will talk about that. You have to think about, again, it's back to Forbes' point, and I also mentioned, is silver is typically found in underground deposits. So you're going to need 150, 200 gram per ton, right? Just like in gold, an open pit gold deposit, a gram or a gram and a half is fantastic, but in underground, you need 6 or 7 gram per ton. The reason these appear low is because silver doesn't typically appear as an open pit. So that's kind of explains that the disseminated mineralization and the silver grades there. In terms of the met, we're dealing here with a pretty simple creature metallurgically. It's a classic sulfide flow sheet. And there's been quite a bit of metallurgy done previously. We're just following up on that by pit phases and by rock type. You'll see recoveries are in and around 90% for silver, about mid-80s for lead, and zinc in the 70s and moving towards the 80s potentially. So pretty simple, clean metallurgy. The gold there is a little bit is low. We think we have potential maybe to increase that as the grades come up. We'll work on that, but we really just are doing further testing on the metallurgy to de-risk the project. So that kind of covers those three areas.
Perfect, thank you. What is the permitting status down where you are, and are you guys permitted, or do you have to go through permitting?
I can touch on that again. We are permitted all the way to a construction decision, and we will this year begin the process for acquiring a construction and mine operation permit. We will begin that, which is quite a bit ahead of time, but we really, this really does, you know, this is extremely encouraging, the work we've done what we've been doing on the project. We think this will eventually become a mine, so we're going to be doing the de-risking steps to take that forward.
So you plan on taking it yourselves directly to mining, is that my understanding?
That's that could be a 1 hour answer, but Forbes,
it sounds like that's what you have in mind, but I mean, obviously, you know, at the end of the day, it's what's best for the company and shareholders.
Yeah, look, in the path, you know, if we do take it to production ourselves, or whether we get bought out along the way, I mean, the path to either of those scenarios is exactly the same. It's about de-risking the project, taking it from PEA to PFS to FS, and then look, you know, if there's a sale opportunity that comes along the way, you know, we then have to do the sort of review internally of the trade-off, the risk-return trade-off at that point in time. And so I would say we're sort of agnostic as to whether we take this to production ourselves or we get bought out along the way. But it's, you know, if you have the crystal ball for the silver price, new silver was going north of 50, absolutely, we'd build this ourselves. But unfortunately, we don't have that luxury. But yeah, we'll keep de-risking and advancing and creating value like that. And if we can crystallize value through a transaction along the way, fantastic. If not, we'll keep advancing this to construction.
Okay, great. So we have a question here from Terry Orslin again. So his question goes as such. So will you have two concentrates, any silver reporting, I'm guessing Z and zinc? What prices are you assuming for zinc and PB when you're using a cutoff?
Okay, so there are two concentrates currently being contemplated, exactly, the lead con and the zinc con. Over 90%, probably even more, of the silver goes to the lead con, where you're getting the highest payabilities. I think that's what Terry was trying to get to. It's associated with the galena. And the other question was, what are the prices we're assuming? So for a resource, we're going to assume, I think, it's obviously, as we get closer to the time, it might move a little bit, but generally, internally, we're thinking of about 90 cents to 95 cents lead, maybe $1. Zinc about $1 to $1.10. At silver, we're thinking about $20 an ounce for what we're using for the resource, and then gold 15 or 1600. As for cutoff, what you've seen before is the area we're focusing is on the 50 gram per ton silver equivalent cutoff. That's really the stuff that, you know, could be a mine at $17 or $18 silver in our mind, as Forbes showed on the cutoff grade sensitivity analysis. We're going to be moving to an NSR cutoff, which will change things a little, but that's really where you're going to get the high margin at the 50 gram per ton silver equivalent cutoff. And then now that we move and the silver prices are moving into the 20s, you can bring that down a little bit and process that material later in the mine life to get additional NPV. So that's we're going to be doing. It's not going to be a fixed cutoff grade across the entire mine life. We're going to be changing it. Highest cutoff grade early in the mine life, highest NPV, cash flow payback, and then the CapEx is already paid off. You continue to do the stuff that's a little bit lower margin in the later years of the mine life. Because this mine life could be well over 20 years. Wow. Forbes, is there anything I missed on that?
Yeah, look, the only thing I'd add to that, what Taj referred to, that's our base case for the PEA.
Yeah,
we are going to include a blue sky case. I mean, the base case is looking at the project through our lens. The blue sky case is more looking at through a lens of one of the majors. And so who doesn't have the CapEx constraints we do, they would probably start at a throughput rate of, say, 40,000 tonne a day, and then maybe go to 80,000 tonne a day. I mean, Newmont with Penasquito down the road, they're operating that at 100,000 tonne a day. So We still are going to show that scenario in the PEA as an opportunity and run a high level sort of mine plan and see what the MPV looks like at those higher throughput rates, to really show that there is that scalability and potential upside beyond the base case scenario, which will be outlining in the main part of the report.
And just to point out, at 40,000 ton per day, as Forbes points out, which is what a major might do to start even, it would be the largest primary silver mine in the world, full stop.
Wow.
So it just shows the sheer size of the project.
Gentlemen, Terry has another question, and I've asked him to ask it himself here. Terry, go ahead.
Sorry, thanks again. Thanks for your patience. Just come back to the first question. It's about 40,000 tons a day. That's about 50 million ounces a year, like off the envelope calculation. Payables in zinc probably going to be difficult because most zinc smelters don't pay for silver. So unless you find one that will take it, where will this concentrates go to? Like there isn't much of a capacity left in that part of the world.
There's two major smelters in Mexico, and we're also looking at options, obviously, in China. So Peñoles has a major operation smelter in the state right close to us that is looking for con. Number one. Number two, you talked about the zinc con. You don't have to consider silver in the zinc. There's not much silver going to the zinc con at all. That's what I was trying to get to in the previous answer. Yeah. So those are the two parts to that question.
In the main commodity traders, concentrate traders also are operational in Mexico. So I know other silver mines just sell to the sort of traffic areas, the sort of Glencores. There's a mixing warehouse. I can't recall what state, but then a lot of that stuff then gets sold on to China is one of the typical destinations, but there are local options too.
And to your point, Terry, sorry, I don't know if you mentioned it, but I just want to reiterate it. 40,000 ton per day, we're producing well over 30 million ounces of silver equivalent a year, closer to 35.
I was using an ounce a ton, so I was a bit generous at 1,000.
Yes, exactly.
4 or 5 million ounces. The other question I have is that it's pretty early. I understand this. I appreciate again your patience with this. Strip ratio, bond index, how hard the ore is, and recoveries. Just give me general parameters at this time. Don't step out if you don't know the answer. That's okay.
No, we can take you back. The previous study had a strip ratio of less than 1:1. It was 0.9 to 1. We think life of mine will be around 1:1 in our new higher grade situation that we have. And that's in addition to some of the stockpile material. If you didn't consider the stockpile material, it might be closer to 2:1. But if you do consider it as a life of mine strip, it'd be close to 1:1 is what we're targeting. You talked about recoveries, which I kind of stated in the previous slide. You're looking at high 80s to 90 for silver, lead, similar. Zinc, we're noticing higher recoveries from our early work into the 80s. And then gold is kind of similar to what it was before, kind of 40% or so. And then you talked about, I forgot, you said, bond work index is about 13 to 14. So very nice, in fact, refining, you can actually have a very coarse grind before you go into flotation, almost 180 to 200 micron. So there may be even an opportunity to reduce the size of the milling circuit versus what they had before. So we're looking into that now. Yeah. So in terms of processing, it's actually a fantastic. I'm a process engineer, metallurgist. It's a fantastic ore to work with so far.
So thank you for that, Terry. Now more of a financial question. So have you had any preliminary discussions with banks or other financial institutions regarding debt financing?
Not yet. So we're sort of heads down. We're going to get the PA out of the way. We're trying to accelerate any PFS work. But yeah, I think we'll start having some of those preliminary discussions probably in 2022 once we've nailed down what those upfront CapEx numbers are going to look like and what the potential sort of funding requirements are for that. So it's on our radar, but we just haven't got into that detail yet.
And so what's your burn rate right now, for example, when you're drilling as opposed to just regular?
So this year, the budget we've laid out, we put a press release out in January, was about $25 million or so. If we didn't do any drilling at all, our cost would be about $2 million Canadian a year if it was just kind of corp G&A and maintenance. So the drilling is the vast majority of our costs here, obviously, and obviously the engineering studies around that as well, metallurgy and things like that. So,
of course. So Paul, did you have a question or two for the gentleman?
A couple of questions. All the warrants that you're showing are all in the money. Is there any force on them, or are they tightly held and you know that they're going to be, kept till the expiry and then taken care of, or what's the situation there?
Forbes?
Yeah, the warrants, 34 million. I think close to 70% of those are held with Eric Sprott.
Okay.
And Jupiter Asset Management. So Jupiter used to be Marion. They got acquired by Jupiter, but they're very bullish on silver price. They've been very big supporters of us. They own about 10% of our company. And of course, Eric's incredibly bullish on silver. So that's where majority of those warrants are held. So very good hands. And pretty much the remainder of all those warrants are held within institutions. And so they'll be coming due around sort of June, July, August of next year. They're sort of comfortably in the money now, but we are confident it shouldn't be an overhang given the hands they're in.
Perfect, right.
And just to point out, and a side part to that is Eric has actually in the past few months been accumulating on the market in pretty large blocks at about 225. Excellent. So we feel pretty comfortable.
All right, so that's the reason for my question. Like, who holds it? So it's not coming back in the market shortly. That's good.
Yeah.
Now, how many assays are at the labs now, and how badly are the labs backed up? Because they're backed up almost everywhere.
Yeah, we did have a backup, but we actually weren't hit that bad. So we've got about, as Forbes has shown from the graphics he had put up previously, we've got about 50 or 60 left in the labs. And we expect, like, our turnaround when it goes in and comes back is generally 6 weeks or better. And so we know some people who had 8 weeks, 10 weeks, 12 weeks, obviously because of COVID. We've luckily been good. And in fact, some of them are coming back in 4 weeks. So it looks like that kind of delay on assays has, for our situation particularly, has improved. But we still know some people, some other companies are dealing with some pretty long delays. But we're not bad. We're hanging in there.
Right, Sophie, there's a couple of questions there you want to ask them, or?
Yes, there's a couple. So there's a question if you've been approached by any financiers.
Any approached by financiers? Is that right?
Yes.
Not right now. I mean, like I said, we're really heads down getting the PA out. And look, I think I should probably mention it before. Does you to highlight it, but once you sort of factor in a lot of these warrants coming in, and if we sort of make our cash flow projections to when we get to a construction decision, we should still have around $60 million of cash in the bank account. So if we're going to fund a project that's say 300 million, assume half of that will be debt, half of that will be equity. You know, we've got almost sort of a little under half of the equity already funded. And then the debt side is a very palatable amount at say around 150 million. So we've really got to get the PA out to confirm all those numbers and then sort of be having the discussions with the financiers more in 2022 than right now.
So here's another question about how many meters have been drilled so far, number of holes, and then what's the program for the rest of this year and next year?
Okay, so up to, maybe you could go to that slide, Forbes, up to what will be included in the resource will be around 470 holes. A little bit over 450 holes and about 180,000 meters of drilling, probably a little more than that. And so in addition to that, we'll see. A big point to note, it helps me bring up a point, is a vast majority of the ounces in the mine plan will actually be in indicated and above categories, which you don't see typically in a PEA. So this PEA is not really going to be a classic early stage arm waving PEA. This is really more akin to a PFS. both in terms of the confidence of the resource as well as the metallurgy, the two kind of key things. So it's heavily de-risked. And like I said, yeah, it's been drilled very extensively. We were roughly estimating to be able to get the remaining part of the inferred into indicated for the PFS, which would come next year. That would be another 40,000 meters or so. And you're talking about $150 a meter for cost. So it's very manageable.
Okay, great.
Terry, you have one more question there. Can you ask it? Because I don't know what EJIDO is.
Hold on. Oops. Terry, are you there?
Ejido. So I can talk to that. He's basically asking about the Ejido. Ejido is the agrarian kind of community that was given land by the government. It's basically, he's talking about land issues. So I think he first asked about water resources. There's several aquifers around the area that we're already looking into. We're doing water studies. We'll obviously know a lot more once we've put out our PEA of the amount of water needed, et cetera. But we do believe we've already been scouting, and we know several aquifers that could fit the bill. Ejido issues, we actually don't have any ejidos where the main resource is. We only have 2 private landowners. We're in good terms with them. And you know, when we get to that stage, they, you know, we'll be working out deals with them. We have long-term exploration agreements with them, but as we get to the construction stage, we will be dealing with them, but it won't be an ejido. I think Terry's kind of pointing out sometimes dealing with the ejidos, it's kind of a community of landholders. It gets a little bit challenging. So that's probably another positive. We don't have to deal with them actually at all. It's just private owners.
I have one last question. What's the deepest hole you've drilled there, or what's the deepest hole that has been drilled on the property?
Forbes?
Yeah, look, there have been some historic holes drilled over 1 kilometer deep. So, and encountered mineralization at those types of depths. So our deepest holes are around sort of 650, 700 meters.
Oh, wow. Okay.
So look, there is good depth continuity. Obviously, there are ounces later on the mine life, but it shows you that this will be a generational mine. It's going to have a very long mine life, which in the silver space is obviously incredibly rare. So,
well, gentlemen, thank you very much for your time today. Obviously, you're going to have a lot of news coming out over the next few months, especially with your drill results coming, all the projects, like, you know, all the things that you're working on right now. Again, to both Forbes and Taj, thank you very much, much appreciated. Thanks to everyone who attended. If you have any further questions, you can send them to Sophie or I, and we can forward them, and you'll get your answers. Thanks again, everyone, and be careful, be safe. It's very hot out there. And
thank you on behalf of Discovery, and even though I'm a Leafs fan, I want to say go Habs, go. Bring it home.
Thank you very much, Taj.
Cheers.
Thank you.
Yes.
Take care, everyone.